Income Tax 101. Choosing the right filing status and filing the individual federal income tax return. Taxpayers that are required to file a tax return must specify a filing status. How to choose your tax filing status? Well, in general, filing status depends on your marital status on the last day of the tax year. Why it is important? Filing status is important because many benefits, deductions, credits, and applicable tax rates vary by filing status. There are 5 different choices of filing status. They are: single, head of household, married filing jointly, married filing separately, qualifying widow or widower. You can only choose one filing status on your tax return, but your filing status may change from year to year. A taxpayer is single if, on the last day of the year, he or she is unmarried, or legally separated from a spouse under a final court decree, and does not qualify for another status. To qualify as head of household, a person must meet the following. 1. Unmarried or considered unmarried on the last day of the year. 2. A qualifying person must live with the taxpayer more than half of the year, with the exception of a mother or father. 3. Pay more than half of the cost of keeping up a home for the year. To be more specific, for filing as head of household, you are either unmarried or considered unmarried. You are considered unmarried if you file a separate return and the spouse did not live in the home the last 6 months of the tax year. In other words, you might be able to file as head of household as a single person, or even if you are technically still legally married. Secondly, a dependent is different from a qualifying person. A dependent can be a qualifying child, a qualifying relative who is a family member, or not a family member. A qualifying person generally must be a qualifying child, or a qualifying relative who is a member of the taxpayer's family, not merely a member of the household. A qualifying person can be a child that is not even a dependent of the taxpayer. The custodial parent may claim a child as a qualifying person for head of household filing status, even if the other parent claims the same child as a dependent for other benefits. A child of divorced or separated parents is the qualifying child of the custodial parent. However, the custodial parent can sign a written declaration, Form 8332, that he or she won't claim the child as a dependent for the year, and let the non-custodial parent claim the child as a dependent. Third, the taxpayer must pay more than half of the cost of keeping up a home for the year. At the same time, a qualifying person must live with the taxpayer more than half of the year, with the exception of a mother or father. If claiming head of household based on a dependent parent, the taxpayer must pay more than half the cost of maintaining the parent's home or the cost of a facility. Taxpayers may choose married filing jointly as the filing status if they meet the following criteria. 1. Both are married and agree to file a joint return. 2. Both are responsible, jointly and individually, for the tax and any interest or penalty due. 3. While different accounting methods are allowable, both must use the same accounting period. 4. All combined income and allowable expenses must be reported. 5. Both are generally required to sign the return. Married couples can choose married filing separately as a status if they want to be responsible only for their respective taxes, or if it results in less tax than filing a joint return. When choosing this filing status, the following special rules apply. 1. Cannot take the credit for child and dependent care expenses in most cases. 2. No earned income credit. 3. No exclusion or credit for adoption expenses in most cases. 4. Cannot take the education credits or the deduction for student loan interest, no exclusion on interest income from U.S. savings bonds when used for education expenses. 5. Cannot claim the credit for the elderly or the disabled if the taxpayer lived with a spouse at any time during the tax year. The following special rules also apply. 1. The child tax credit reduce at a level of income equal to 1/2 of the amount allowable to joint filers. 2. The retirement savings contribution credit also reduced to 1/2. 3. The deduction limit for a capital loss is $1,500, instead of $3,000 for joint returns. 4. The standard deduction is half that allowed to joint filers. 5. The limit on income excluded under an employer's dependent care assistance program is $2,500, instead of $5,000 for joint returns. If one spouse dies during the tax year, the survivor can file jointly if he or she otherwise qualifies for that status. The year of death is the last year to file jointly with a deceased spouse. Qualifying widow or widower is the filing status for 2 tax years following the year a spouse died. This filing status entitles them to use joint return tax rates and the highest standard deduction amount. After the 2-year period has ended, the taxpayer may no longer file as qualifying widow or widower. If they do not remarry in the 3rd year, they considered single. They will need to use the single filing status unless they qualify to file as head of household. To file as a qualifying widow or widower, the taxpayer must meet all of the following tests. 1. Must be entitled to file a joint return with their spouse for the year the spouse died. 2. Must not remarry before the end of the tax year. 3. Must have a child or stepchild, but not a foster child, for whom the taxpayer can claim as a dependent or could claim as a dependent. 4. The taxpayer and the deceased spouses paid more than half of the cost of maintaining a home. 5. A child lived in the person's home all year, except for temporary absences.